Hey everybody, welcome back. Let's have a look at what's going on in the gold market. Sive is here for the forexpeacearmy.com as usual. So in general, market has achieved the target that we have talked about. This downside ABCD OP. Market extremely oversold on a weekly chart. And generally speaking, this area around 42 is technically attractive for taking the long position. I'm not speaking about the major the upper continuation here, but the area in general is strong enough to trigger at least some pullback here. So we talked about the big oversold on the daily chart. Market is also stands at oversold. It also stands in agreement support, which is the combination of the OP and fib level 41.86. In general, this combination by itself, together with the oversold area on the daily chart, creates the bullish stretch pattern. So if you would like to take the short position on the gold, I would prefer to wait for some bounce before considering any new bearish positions. This is the potentially first pattern that actually stands in progress already. Second pattern, here we actually could get small daily bread body sell. So once market will show more or less significant pullback here, reach for some predefined resistance areas, it should be momentum downside trade. So because we have more or less significant frosting action, pullback suggests appearing on the momentum trade, or as Jordan Napoli terms, bread body sell. That might happen. And after that, more extended retracement might happen. Everything now depends on the geopolitics, but technically it might look like I just explained. Just because don't forget that on the bullish side we also have a big momentum, and since we're talking about more or less significant time frames, daily, weekly reversal process here, and normal reaction, and in general reaction that we are talking about, could take a bit more time to be formed. So it might be not in a kind of the V-shaped fast reaction, but market needs to fade a bit momentum, then start preparation, forming some bullish pattern around, and then it could make some extension higher. But at this point, currently, I do not count that it will be, well, some kind of the straightforward upward continuation above the top. I would count on some technical response, 30%, maybe slightly higher, maybe 618 resistance. So that's two possible targets that we theoretically could get. But everything that I have mentioned still stands ahead. Now we're interested with what's going on the bottom and what particular we should to keep an eye on. So on the full time frame chart, you could see that these in fact levels that we're considering. So currently on the bottom, I do not see yet any clear pattern. So we have some drop, fast response, and market stands some retracement. No grabbers, actually nothing. For position taking on the longer side, I would prefer to get some pattern, or at least to get price a bit closer to the bottom, to invalidation point, just to minimize potential risks. Yes, inside of the current triangle shape, we have some type of the engulfing performance. So very typical for engulfing patterns, where we have some kind of the V-shape reversal. Then we've got ABCD retracement, giving us Gartley steeple to buy, and market stands in the first upward action. But don't forget that momentum in general stands rather strong. Although we are not counting right now on the breakout of the lows, just because market already has completed important target. So the OP already has been reached. If it would stay, say, just below this area, chances on the downside breakout might be more significant. But currently, we don't have it on the table. But at the same time, due to the existing momentum, I would prefer to wait a bit deeper retracement for taking the long position. It just will be safer in the current circumstances. Because we can't forget about the overall geopolitical situation. We can't forget about the big amount of the fake news that currently appearing on the market, which is increased volatility. And taking it all together, it is in our interest to just reduce our risk exposure. So from that standpoint of view, I will be waiting for some maybe deeper retracement if it will happen. Or if not, and market starts upward action, then I will be watching for some kind of the greater reversal pattern. I would call it as a reversal pattern of the second scale, the larger scale, when the first fluctuations around the Fib levels will be over, small fluctuations, small reactions, then something bigger should start forming. And if we will not get good chance to enter with this setup, for example, if market will not form kind of the ABCD deeper, giving us some greater ABC and 222 pattern, I would prefer to wait, because taking position right here, we're placing stop somewhere below the 41 area. For me, it seems too much. Too big distance for placing the stop order. So from that standpoint of view, I would prefer to wait. For a short position taking, it also seems a bit early, because market hasn't formed yet an extension, hasn't reached some significant resistance levels where we could theoretically think about the position taking. So keep it short. Reaction of the market on the current target and support area is just started. We just need to give some time to the market to form something reliable, some clear patterns before we turn to action. That's our current view on the gold market.